we rallied towards 52,800 in Bitcoin, and then we dropped. So this is now a 16% drop in the price, and the market looks like in a little bit of panic and now getting towards a support level. So what really happened there? If you're looking at Bitcoin, you have this trend where you see the highs are getting higher and higher, and you see this pattern with your support trend line. Fine. Now, if you are looking at Bitcoin and saying that, then you would be looking at XRP like this. Okay, we just had a fake out. We really thought it was a breakout, but we came back down to retest this support again. Now, what just happened at that point? You need to know what happens in the market on short term. The news, the current affairs, it impacts the price a lot in short term. So with these news coming out, it really put a lot of fear on the crypto market, especially when you see like Russia saying this, not ready to accept Bitcoin as a legal tender. When you see small countries like El Salvador or others are preparing to take this on, that's something different. And in US you see this. Now Brad Garlinghouse has been highlighting this from some time about SEC and their approach towards crypto, but right now it's going against all of them. If you remember back then, December, most of them were pointing their fingers towards Ripple, the company, and XRP, trying to alienate them from crypto so that they are safe. Now no one is safe with this type of SEC. They don't actually understand what the market is doing. They are right now saying the yield which you get on your asset versus security. I really don't understand what sense that makes or where it actually comes from, which book, which theory, which they are looking at, because they refused to tell Coinbase that why they think it's a security, right? So they don't even give you a reasoning, a justification of why this is so. Now that's the fear in the market, and that fear just pushed the price lower. Now, if you are looking at this price and saying, okay, we went a lot low, no, we didn't. If you are looking at the macro trend, you are still there strong. You are looking for the market to continue higher. And understand one thing, there's a lot of stuff which you need to understand if you are an investor and you are in a market where volatility is there. This is from Fidelity, and they actually gives you a lot of information. If you want to play this video, you can play. I'll put the link in the description below. But the key part of this, we'll discuss through that, because you understand what's happening. You understand why to stay calm. You know what to do to make money, because making money is not that easy, and they give you different stuff and explanation where you understand, okay, this is what's happening in the market. And I really don't want to try to be that guy who tries to time the market rather than giving time in the market. So let's actually dig through all of this and give you a proper explanation of what's happening, because with such an idea, a proper guide of what's happening and what you are looking at, you don't lose money. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. As we just understood from here, market is volatile, and especially crypto market is way more volatile than any other markets which you can look at. Now, I don't want to take you through the entire article, but what I want to give you is the gist of it. Now, if you look at this, it's what we always say. There would be huge volatility. If you are looking at the general trend, you now know this is the general trend. Within that general trend, you have a macro cycle. Within that cycle, you have a micro cycle. Now, if you enter short term, you're going to get nano cycles. So that's going to impact your emotion, your psychology as an investor if you don't know what you are really doing. Now, read this. The sharp falls that can be experienced at such times are understandably unsettling for investors. Now, that's what you see in crypto market right now. They can even tempt some to change their long-term plan by selling their investments. How many of you did that? How many of you didn't? That's what makes you an investor or a newbie losing money. Now, However, the market volatility does tend to be short-lived. So are you gonna stay here for some time, or are you just in for a couple of weeks? If you are in just for a couple of weeks, yeah, it's fine. You have to take the losses. If you are not a trader and you're not doing well, then there is no other choice. But if you are in with a little bit of time and you are trying to make money, not trying to time the market, then that's fine, because here they highlight this one, say don't try to time the market. Don't try to time the market, right? No one can consistently predict the market, not even the experts. Yet many investors think they can guess what will happen. That's why we say you look at the fundamentals of any project and then understand what volatility means, right? Short term, it's gonna move your emotions up and down like a pendulum, but long term, it's kind of a weighing machine, as we all know, right? When you look at these and look for 10-year holding period and 1-year holding period, your volatility is so high. You can go towards negative 67, you can go up 162, but long term, it's not like that. Now that's actually 10-year. What we are not looking at is not stock market, but the markets tend to be similar. Now with this ideology, if you are actually entering into crypto market, you are watching this. This is a trend which we had in last cycle before we ran up huge. Now in this cycle, if you look at this, the trend angle is really different. You just have to understand this one. If you are following, it's 6 degrees, and this one, if you are following, it's 28. So basic understanding for anyone would be like, okay, fine, last time we had investors, we had volume, but this time it's monstrous. Last time, if that was the increase in the low, this time it looks like this. So that's the monthly chart. That is the long-term trend. And if you are a friend of the trend, trying to trade it, make money, and you have time, and you're not trying to time the market, then you still have space there to enter and make money. Now why would I say that? Because you just came back to a support. As you bounce, you can buy back in. Now if you're a long-term investor, it doesn't matter where you enter in a short term, because if the price is going to that places where we think it's going, it doesn't actually matter. Now look at the RSI. In both the cases, it had this. It was trending to the upside. You had this channel. Then before it went up, it came to the downside and faked out to the downside, kicked a lot of traders out, and then moved higher. So if you are being in that panic selling group, you miss this. You definitely miss this. Now you look at the trend and you understand, okay, each time when we are going up, we come down, but we're creating a new high. This is not rocket science here, right? This is so easy for you, me, or anyone to understand, that the market is giving you all these symptoms. You can just have to jump onto a weekly chart. Now this is one of the easiest stuff to do in any market to make money, to understand the trend. You just follow either the highs or the low. Say for example, this is the lower low which you got here, then you're following it and you're placing it for the next low there. That's great. Now you have a higher low. Now you're trying to follow the next one and you get 2 lows there. Now you're not going below that trending low, you are still continuing higher with another low coming here, which is 0.51. Now if we place it precisely, yeah, we come close to that. Now if we are following this trend, what you think the price is going to do? Because if you are looking at the RSI, you kind of see, okay, fine, we have this particular trend where we connect 3 or more touches and then try to connect the bottoms. So if you are trying to connect the bottom in this one, you get a pattern which gives you an idea of what the market is doing in long term. We're waiting for a breakout. So if we are trending low here, fine, we are going to consolidate a couple of weeks and then we are going to go back up because we're going to bounce, right? That is the perspective which is easy to understand. Now on a short-term chart, when you see stuff being so volatile, it's because it's a short-term chart. Now you go into a 2-hour chart or a 4-hour chart and look at the charts. you see like, okay, we just dropped, fine, but still even in that 4-hour chart you are able to understand that the price dropped to that support level. Now why is it important? You go look at silver market, you go look at gold, all of them dropped. Now yes, we had some negative news in crypto, so the volatility or the drop in percentage was higher, but right now you are slowing down at the range where you were being supported previously. Now that changes a lot of stuff. So if you were trading with leverage, now you have a little bit of risk there of losing your capital, because any market is risky if you don't understand what you are doing. And when there is a change in the macro trend, you will understand what to do. Now if you don't understand the macro trend, you don't even have to understand huge price action, huge technicals. You just have to move out, you just have to step back. Now you can go to a monthly chart, you can go to a weekly chart, it's up to you. And when you look at this and see, okay, we are trending higher with higher highs, higher lows, what are you looking at? Basically this is a bull flag. Now the problem with people in the market is they never look like this. They try to kind of say, okay, everything is dropping, we're going to go down, blah blah blah. This is the drop we are all talking about. Now don't consider the price increase from the bottom here or the bottom here. Just consider the recent bottom and extend your chart like this. So what do you see? You came high like this, then you dropped a little bit and you're literally becoming negative. I literally don't understand that concept, because if you are looking at this, last time we made this run up and then we corrected all the way back down. Now that's what we call wave 1, right? So the pattern of starting of that wave 1 was that, and then we pumped through the wave 1. Now what we are looking at is our wave 2. We are waiting for the wave 2 to continue higher. So literally, if you are that guy looking at, okay, fine, this was your break of consolidation, then you started that wave 1, that's fine. Now you're waiting for the price to increase, but if you don't have time and you're trying to time the market, it's going to be really hard. Rather, you can literally average down, because 1 year there are a lot of people who lose money. 5 years, the number of people who lose money is reduced. 10 year, it's a lot less. Now the difference is, in stock market, the market cycle itself is the economical cycle, which is 8 to 10, 12 years. So you need that much amount of time there. But in crypto market, that's not the case. In crypto market, this is now like 4-year market cycle. So in that 4-year market cycle, you are literally looking at the trend line, which is moving like this. Great. For majority of the asset, we are doing this. But what are we looking from here? We are eyeing for a level where we think that this is going to do magic. Now what are those magic? If you are following the price in a way that, okay, fine, this is going to do this, this is going to do this, and then you see it moving up, the red line here, this is the trend. Okay, what I'll do is I'll just take these out so you get the clarity of what's happening there. So this is your trend line, you are moving up, then that's the macro trend. Within that macro trend, you now have a cycle moving up, down, and you're going to do that. You're going to continue that for a lot. And if you're trying to trade, this is say on a weekly, you see this patterns. Now if you're entering on a daily, forever, you're going into nano cycles, which we are not even trying to explain here. If we are looking at daily to 3-day chart, what you are literally looking at is this one here. You will definitely be getting a lot of fear from the market if you are trying to go with this, because the market always have the cycle. Whether you are in silver, whether you are in gold, whether you are in crypto, whether you are in stocks, you are gonna get this for damn sure. Now question is, are you trying to get this blue line or are you trying to get this red line? Because if you are trying to get that macro trend, that's fine. Now if you are trying to average it out, it's still fine. You still get the average of the market. Last time it was 27x in wave 1. Remember, 27x in wave 1. So you're anticipating the market to do 50x, and even if you have a lower average cost basis in various assets, you can still anticipate a minimum of 15x in your portfolio, but only if you stay put in the market, only if you stay in this direction. If you are trying to buy this, take profit here and buy it back here, it's fine if you do that perfectly. But if you miss something at the top and bottom, you're not going to do well. The number of units is going to reduce because you sell for the sell price, you buy for the buy price. You always get the lower price there, meaning you are always on the losing side. Not the exchanges which you buy, they never lose. If you're going in leverage, they never lose. They never lose, and you always does. If you're going leverage, understand the price. What the price action usually does in any market is like the price moves up, fine, it has a trend. Say this is the trend line. Now, if you look at the trend line in XRP, you're going to see this. We move up like this, come back down. Now, why is that? Because most of the people, they put the stop loss like this. If you are experienced, you'll take the average true range and then plot it below your support, most recent low. But most of them does that like this, and the market just liquidate them and then continue higher. So do you want to be here? Or do you want to be here and take all this profit compounding, whatever you had all over the time? Say just for example, if you are getting 5x here, you're trying to make 10x here with all this risk, trying to take your profits here, buy back here. If you just hold this and you get another 10x, now that's 50x for you. So that's the impact of compounding through wave 1, wave 2, wave 3. Now we are just considering wave 1 and wave 2 now, and most of them should be happy with what they get at the top of wave 2. But if you are not dollar cost averaging, when the market gives you an opportunity, meaning only and only if your price or the cost basis is above this for any asset, you now have a huge opportunity to average that down. Say your price cost basis in XRP is $1.6. You literally have an opportunity to average that down towards $1, right? So that's what you do. You buy when the market drops, not when the market goes crazy high. Now, when it goes up, you're happy, that's great if you bought back in at the bottom. So that's the type of investing what we are talking about. And if you really get value for your time here, please do support the channel. Hit that like and subscribe button. That supports the channel a lot. So guys, if you have doubt about the market, you can ask me, put that in the comment section, and I'll try to get back as soon as possible. I'm a student, I'm doing my PhD, so I'm nearing the end of my degree and I have a lot of stuff happening in around the university. So I'm trying to, balance everything together. So if it's a little bit delay, I'm sorry about that. So guys, I'll meet you on the next video. Bye for now.